game-changing discussions on the big ideas that shape our thinking. This is One-to-One.
Hello and welcome to One-to-One. Healthcare systems scale in emerging markets when capital discipline, governance and long-term stewardship are aligned. My guest today is co-founder and chief executive officer of Iwosan Health Systems Limited, a healthcare investment platform focused on strengthening clinical infrastructure in Nigeria. Early in her career, she served as chief executive officer and later chairperson of Hygeia Group Nigeria, overseeing a vertically integrated platform that included Lagoon Hospitals and Hygeia HMO. Fola Laoye, welcome to One-to-One.
Thank you very much, Tux, and nice to be here.
Real pleasure. Thank you very much for joining us. So Fola, you've operated across hospital leadership, managed care, private equity. Now you're doing healthcare investment. Well, you've always been in healthcare investment, actually. But what I'd like to say is, looking back on this very long arc of yours, what has most shaped the way you see or you think that healthcare actually functions in emerging markets?
I'll start maybe a little bit at the beginning. I came into healthcare, I would say probably 27, 28 years ago now, and really almost by accident, right? So I wasn't a healthcare operator or, I'm not medically trained. But of course, I come from a significant, shall I say, medical family, I'll say. So both my parents having been doctors, I have a sister who's a doctor. And so, of course, grew up. And incidentally, my father's two siblings were also doctors. So certainly, this was the way in which, we grew up knowing the importance of medicine and medical care. Having said all of that, I chose a different path. One where very early on, I remember my father having the discussion with me. I was saying, will you go and do medicine? Because I was very much an all-rounder as a student. But my love for football actually got in the way.
I see.
And I said, I wanted to be a sportscaster, I guess a football pundit, as you would call him today. And that wasn't going to happen. So I ended up becoming an accountant, which was the path my older brother had treaded, and literally followed that path. But of course, once I did that and I worked in, shall I call, financial services, I realized that I wanted to do something more entrepreneurial and something that I felt would have more impact, on our society. And of course, my parents by then had a whole career in what I'll call public health, working and running the teaching hospital, Luth, and the medical school, and had then deviated into the private sector by starting up Hygeia and Lagoon Hospitals. So around that time, I did two things. Took myself off to business school, so went off to Harvard Business School. But at the same time, just before that, decided to go head first into the business.
Sure.
And I think putting the two together showed me very quickly that, the market was going to be very important, how we shaped the market of healthcare in the private sector, and particularly how we financed healthcare in the private sector. So almost from day one, when I went to business school, this was already on my mind. And this was something that I was almost seeking. It was almost like a holy grail for me to say, how do we really fund healthcare, especially in our part of the world, in Africa, in Nigeria, where we knew that what people could afford to spend was much, much lower than in developed markets. But at the same time needed pretty much the same level of care. So that thought process, again, at business school made me really sort of start to really scratch the surface. And one landed me in the whole, what I'll call health insurance and HMO world.
Sure.
Because it became clear, looking at the US model, which again, you could argue where that model really lands you, but it certainly was a very interesting model to understand the way in which, services are pooled, the market is shaped and created, and obviously with that market being shaped, how investors then react to the marketplace.
Of course.
So I came back with that thinking, knowing that yes, financing healthcare had to be on the two ends of the spectrum, the demand side and the supply side. So of course the demand side was being very much, so we started the work to really drive the concept of health insurance. So with that work and with what my parents had done, Hygeia HMO was born. And even to birth an insurance scheme, we still needed to raise money for that. So I knew that whichever way we went, in the ecosystem, capital was critical. And capital, of course, is never fungible. So you've got to sort of think about it from different perspectives. But in our market, capital also had to be ready to go the long haul as much as possible, because this was, like I said, 27 years ago, a very nascent healthcare market.
Of course.
And so one of the things that had been going well for us, I must say, was the fact that when my parents started to set up Hygeia, they themselves, as doctors, had also had to stop and say, how are we really going to raise capital? Because they were doctors.
Of course.
They didn't have any, bag of cash, lying around. In fact, just before then, we had had a very challenging time, when they left their careers in the medical school and were still trying to figure out what next. And so my mom had had to go into Ikwari Market to set up a market clinic.
Interesting.
Just to really be able to serve the market women and look after them and, and raise some funds through that approach. So I'd seen that approach as well of demand, in a real, informal market setting. My dad had set up a small clinic at home, and I grew up around that clinic, and I used to do like part-time jobs there, again, as a way of being able to really conserve what was the family's capital whilst that grew. So I'd seen the concept of having to raise capital for healthcare, from a very young age in many different settings. So, and then particularly when they then set up the entity called Hygeia, they then decided to do it formally and went to a bank and asked to raise, to write a business plan and asked for, a proper capital raise. And in doing so, they ended up with a mix of investors, a lot of them being individual investors, some of them being friends and family, and a few institutional investors, some insurance companies. And with that sort of, shall I say, hodgepodge of capital at that time, they got started. But it meant that they also had to be accountable for the capital. So from day one, they had to have a board, they had to have governance in place, they had to, be able to do their accounting and reporting and so on. So again, I had had a ringside seat. I mean, obviously I had trained as an accountant, but I also saw the way in which they were managing the business with all of that in mind. So coming into that, with all that sort of background, it was clear to me that we needed to think about capital, as I said, not just on the demand side, but on the supply side. That would also be, shall I say, long-term, institutional, where possible. And that would really be able to sit side by side with the demand we were trying to pull together as a health insurance business, whilst at the other side having a provider, business. So I could go on and on, but yes, thinking through capital and raising capital, for healthcare has certainly been something that has evolved over time, but has been by no means easy. But certainly over the years has begun to get more, shall I say, more institutionalized, has become more, has a framework around it than perhaps in the early days.
So really, you, as you've said, you had a ringside seat, and you were able to witness that institutionalization more or less from the start of that venture with your parents. And of course, we're talking about emeritus professor of surgery, your father, Professor Emmanuel Adeyemo Lebute, and your mother, professor also at the Lebute, and that was your beginning, as you've said. But of course, healthcare does not scale on sentiment, does it? It scales on governance and as you've already spoken about, capital discipline. I'd like to know, in a structurally volatile system, let's start there. What precisely makes healthcare investable in the first place?
Bankable, right? And well, I think that's very important. Let me go first, and as you've said, in a structurally volatile world, but let me go to the more stable, society or stable market. Of course, you have markets like the UK where you have what I'll call a single provider, single payer system like an NHS, which still gets funded, right? Yeah. Gets funded through tax money and so on. And then you go to other markets where they're much more driven by private sector, like the US and some other countries. And there, certainly the fact that the economies themselves are thriving, and through that, of course, people need care and can afford more care. And of course, perhaps in a way, and it's an interesting one that we'll get to see, that in a way, the more the economies thrive, sometimes the more there's a higher disease prevalence that comes with that because of lifestyle.
Absolutely.
And so having created that, but knowing that there is, like I said, the GDP, if I can use that word, if there is a, domestic income in the country that is quite significant, health always takes its share of that, and it is, I think, an economic, fact now that health spend tracks GDP.
Yeah. So
you see countries like the US where health spend is, of course, perhaps more than tracking GDP. It's, 12, 15, 17% of GDP, which is probably higher than most. Yeah. But still, of course, GDP is a very big number.
Yes.
And so that's where you normally would say, yes, you can understand the bankability because there's high GDP and therefore high spend. In our markets, indeed, GDP is much smaller. And of course, it's much more splintered across a bigger population. So it gets more difficult to really say, do we have the right level of GDP, to see the health spend grow. But be that as it may, the key, though, is that the services are still required.
Yes.
And people are still going to find money to pay for care, which is why we have such a significant out-of-pocket, what you call out-of-pocket spend. We have an out-of-pocket spend of almost 70% in this market because people need the care. The need for healthcare is what I'll call inelastic, as economists would say, which means that, it doesn't go up and down. Yeah. It keeps going. And in fact, as I said earlier, as the economy begins to grow, you also see the lifestyle changes, which push the need for care up. Yeah. So it's really that, what I'll call demand for care, which over time starts to translate into a market for care, which really then creates the bankability.
Yeah, but of course, for that, demand, of course, yes, is inelastic. But talking about out-of-pocket spending,
Yeah.
I mean, pockets aren't that deep, are they? Perpetually?
They are not necessarily, but we have a large population. And that's something that we always have to count, on. Again, as you've rightly said, the demand for care is there, but what you call the effective demand, which is the demand where the pockets can really deliver, still not a small number, because when it's 200 million, 250 million people, the effective demand, even out of that population, is significant.
As you and I will know.
So therein creates the bankability.
Yes, of course.
I think we shouldn't also ignore government and government spend, and perhaps more and more now where government is also, over the last 20 odd years, has realized that it makes sense to also spend on the demand side, not necessarily just the supply. It's not just about building buildings and cutting the tape anymore, but it's also really putting funding in the demand side, tracking the outcomes, well, hopefully tracking the outcomes more and more, is as important. So government is also beginning to put some of its own money on the table through health insurance schemes, the NHIA, at the federal level, at state levels, and so on. And don't forget that government too is the largest employer of labor.
Absolutely.
So even just through the fact that they're looking after their own workers, is also putting funding on the table. So I think you will find that the pool of funding on the demand side has a trajectory, which, as we see the economy improving, will also really start to take off. But certainly, if I think back the 25, 27 odd years that I've been at it, has certainly grown significantly.
Absolutely. And as you've said, if we're going to make a case for healthcare in this country, of course, your view is we need to look inwards. And of course, our horizons need to be long.
Yes.
Do they not?
They do.
But having said that, of course, healthcare still quite often attracts quite a lot of short-term speculative capital. Does it not? I'd like us to begin to unpick that from here on. And let's start with me asking you to tell me, please, in your view, what differentiates disciplined healthcare capital from opportunistic capital?
Well, certainly, as you said, and I will always sort of use the examples that at least I have been part of. If I look at Lagoon Hospitals, it's a 40-year-old endeavor. It's a 40-year-old healthcare system in itself, really because of that discipline, because it started with discipline, as I mentioned. It started with governance, started with, a board, it started with shareholders, by the time we were even getting to bring private equity funding in, and they were coming to do due diligence and rip up the carpets to look at everything.
You were already institutionalized.
They found that the board meetings were numbered, and I think we were like on the 97th board meetings by the time they came along. And that was important. That was, to them, very important that, there was this level of documentation, this level of rigor to doing what we were doing. And that continues till now. You have to be able to show that record. You have to be able to show the fact that capital can come in and it can be returned. That's the other key thing. I believe I've been through the process of raising capital probably 6 times, and at least probably I'm on my 6th time now, but the 5 times before always returned all the capital.
You've had exits in
Exits.
the typical PE logic
Absolutely.
type of way.
So, yes. So whether it's been in the PE way or whether it's been in a more, shall I say, just long-term investors who also have, over time said, okay, it's time to sell on to another shareholder and so on. But so that has been as important, that the discipline whilst you're running the business, the discipline of being able to make sure there's an exit and that capital can be returned. And also the discipline of making sure that when capital is being returned, it's returned with a margin on it. So from that perspective, we're no different from any other sector.
But do you accept the premise that disciplined capital must accept slower returns?
In a healthcare sector, I would say yes. And the reason is because the return we really seek, is a double bottom line. It is, and maybe that's also where we are different from the more established, part of the world, where there's higher economic returns and larger GDPs and so on. Here, because we're still working in a very nascent way, but knowing that first and foremost, we're doing this because we know that there's a care case to be solved. So it means that we're looking at making sure there's a return in health outcomes and health care itself, and there's a return on capital, of course. And therefore, that return on capital sort of has to be leveraged by the return on care. And having said that, anywhere in the world, again, healthcare returns are not the same as returns in other sectors.
Correct.
So you're never going to come into the sector because you want to make the very big money. And maybe that's why also, like you mentioned earlier, that the folks who come in, the sort of hot money that comes in doesn't stay because the return profile doesn't quite match that.
And do you find in your experience that your investors are accepting of the fact that you have to reinvest in slow infrastructure in governance and that you make a case for outcomes?
Absolutely. And I think it's important to be very upfront from the start. So we don't put a business case that's any different. So for every investor who's looking at us and what we're doing, this is what we put on the table to say, it is a double bottom line. We are looking for healthcare outcomes in addition to financial outcomes. It is going to take time, so we do need, you to be there for the long haul. We need patient capital.
Pardon the pun.
For the patient. Yes. And so with all these things in mind, we end up having to be very deliberate again about the types of investors we seek.
Yes.
And of course, I guess, the other way around too, the types of potential investors who seek us.
You out.
It's also because we are very much aligned, with that sort of mindset of how to go on this journey.
So delving further into this, let's talk about survivability.
Right.
Okay, and I'll put a blunt question to you. Is it, in your view, is building a strong healthcare business the same as building an enduring healthcare institution?
I think the institutional part, is what I've talked about almost from the start, and that the business needs to be institutionalized.
What's the point of that, though, beyond in thinking about survivability?
Because institutionalizing any type of business is what does govern and, make sure that you can confirm survivability.
Survives you beyond the founder.
It survives beyond the founder.
Yes.
Again, if I go back to what I call my own 1.0 career in healthcare, being with Hygeia and Lagoon, we've moved on now to what I'll call 2.0. So 1.0 was started by my parents and so on and other investors. 2.0 is a totally different stream of investors called Iwosan. But Lagoon continues. Lagoon survives through it all. And so will other entities who are also coming on our platform. We are now acquiring a couple of other platforms, other entities onto the platform who also see the same, who look at it from the same lens that we do of saying survivability. How do we ensure that this healthcare practice survives beyond us, the founders? How do we ensure that we can continue to give great care, to our communities, to our markets for time? And I think that that's what the institutional base allows. Because once that institutional base is there, being able to bring others on and actually create this long-term viability becomes much more assured.
And I, of course, I ask this next question because, of course, architecture must reflect context. Would you say that African healthcare requires, or does it require, a different capital architecture from developed markets? And if so, to what extent?
Oh, certainly, because I think, again, even the healthcare in developed markets, I have to say, did not start necessarily with the very formal capital systems they have now. They almost all started with what you call blended capital. So, and still do. I mean, the US hospitals are the ones who probably have, the most donor funding than you probably see in most parts of the world. So yes, finding, blended capital, donor funding, infrastructure capital, which, health being really looked at as like infrastructure was very important for places like India, where it meant that they could get long-term capital at very low interest rates from day one.
Infrastructure rather than growth.
Rather than growth capital. So yes, certainly, I think we still have to go through the motions of finding, as I said, the hodgepodge of capital still needs to be put, firmly on the table. And even public capital too. The concept of public-private partnerships, we are working on one now with Lagos State. And it's as important as well to really be able to bring private capital to the table, but, also public infrastructure where possible, and obviously work together to say how can we not just create a service, but also create a training platform and so on. So bringing the different pools to the table is extremely important.
And finally, Fola, do you, based on your experience, really believe that private capital can truly institutionalize healthcare delivery in Africa? Or do you think that we will continue to have to bear with structural fragility and constraints going forward?
Well, after 27 years in this space, I believe and I hope, and not just believe and hope, but I also know the work that needs to be done to make it happen. But certainly, yes, private capital, has its space, has its place in the healthcare sector, now more than ever. And I think really will lead the way.
Fola Laoye, thank you for joining us on One-to-One.
Thank you, Tokes.
Thank you. Thank you very much.
Thank you.